Hello everybody, welcome to my new trade recap of last week. So that week was for me a minus 3.8% week because I took two trades with 2% risk entry. That's because my FTMO is already ending, so I have still 2 more days to trade. So I was in a losing streak, last weeks. So that's why I took these last two trades with 2% risk entry, and that's why I'm minus 3.8%. So the first trade is USDJPY on the weekly chart. What we saw here was that weekly bearish W that could play against us. Because I was looking for that long with that weekly bullish candle close that formed here, so I went to the daily. And on the daily, what I saw was, okay, we had here a shoulder 1, this head, shoulder 2, an inversion and shoulders without a break, because this is just a wick that came back to the previous highs. So this is an inversion and shoulders without a break. So I drew my daily zone at the shoulder 1, and then I went looking to the 4-hour for a possible entry. And what we had here, we had a diesel trade. We had our first candle, second candle, third candle, blue one, which is nice. This is a must for us. And then on the fourth candle, I could take my limits. And then the trade was active, and we went a little bit to the downside, and then we went up, 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 up. And then we went around 1.1%. So, and then the price went back down to my break-even point. So this was a break-even trade for me personally. So the second trade I took on my FTMO was EURNZD. So if I go on the weekly, if I refresh it like this. So on the weekly, what we saw that we were still in a bullish market because this is our low and this is our high. So everything between that is just a correction for possible more upside momentum, as you can see. But what we saw was we were still making here that smaller bearish W on the weekly. We were at these weekly highs. We were making 2 weekly bearish candle closes. So we had a weekly bearish W, weekly highs were touching, and the weekly retrace candles that were closing bearish. So I could look for a daily pattern to the downside. So yeah, then I went to the daily. And what I saw on daily was, okay, we had here still a bullish market from the daily. This was our low, high, higher, low, higher, high. This is the bullish M that could still play out, which is now playing out because we touched here from this low here till this high, the FIP levels between the 61.8 and the 78.60. But I was looking to that bearish pattern. So I took my Fibonacci from the high here to the low, the whole structure. And then I saw here that kind of bearish W, natural W, same lows, same highs, the FIP levels aligning at these daily highs. So I drew my daily highs here for the natural W, daily highs, then my false break, black horizontal line at this highest wick. And then I went to the 4-hour to look for a pattern. And what I saw was we had here a bearish W. So we had here that first leg, second leg, third leg, then the fourth leg. I took my entry here at that previous structure, and then we could go to the daily minus 27, but we didn't do that. We went straight to the upside. So yeah, this was a minus 2% trade for me because I took it with 2% because my FTMO was almost ending. That's why this was a minus 2%. So then the last trade was EURJPY, sorry. So if I go on the weekly, what we had here was a very nice ascending trend line holding the price up, first touch, second touch, third touch, possible fourth touch, to hold the price up with that weekly bullish candle close. Is a very nice aligning with that bigger bullish M here that could hold the price up. Everything between this low and this high is just a correction for possible more upside momentum. So this is a descending channel counter to the trend. Very nice to see that with that weekly bullish candle close, we were making this bigger bullish M here, as you can see. So I went to the daily then because the weekly was clear. And on the daily, what I saw was, okay, normally I wouldn't take this trade because if I take my Fibonacci from here, the low till the high, because we were still bearish on the daily because this was our high, low, lower high, lower low. Everything between this low and high is just a correction. but we touched the previous highs. We had that weekly bullish candle close, so I could look for a reversal pattern. So this was possible. Our shoulder 1 then had shoulder 2, but we saw in that also a bullish M. So we had here that bullish M also. So I was looking for that bullish M fake out. So we had here that false break. So the fake out, we were closing below this previous lows here. So we were closing below that. And then I went looking on the 4-hour. But normally my 61.80 needed to be touched on this previous higher low here. So normally my fib must be around this region. So the 61.80 aligns with that bullish M on this previous higher low. So yeah, this was a more risky trade, and normally I wouldn't take it, but yeah, it was my last 2-3 days to trade the FTMO, so that's why I took this one. But yeah, this is maybe a trading error. Normally I don't trade that because 61.80 of the daily is not touching my IC here. So yeah, so if I go to the 4-hour, then you can see we had a diesel. My first 4-hour TP was around the head and shoulders here, shoulder 1 here, head, shoulder 2, for possibly taking some partials there. And then, yeah, we had that first candle, second candle, third candle is a blue candle. Then we could take our limit. And yeah, I took it with 2%. And then, yeah, we went to the downside. So this trade, if it was not my end of my FTMO, I wouldn't take it. So that's why I took it. So yeah, sometimes you need to take some risks to make up the losses to break even again, because yeah, it's normally to do that sometimes, to have some risks, and yeah, just do it. So yeah, these were my trades. I took also gold euro. So gold euro was on my demo account, because normally I don't trade yeah, gold, silver, metals on my FTMO, but you can see it works also. So if I go to the weekly, what we saw, we were in this clear yeah, bullish driver. We had our low, our high, corrective nature. As you can see, we broke out of it, this descending channel. We broke out of it. So my next target is the beginning of correction here at this red horizontal line. So we had that weekly bullish candle close, very impulsive closing above. So we could look on the daily for a pattern. And what we saw on the daily was same highs, same lows. And yeah, we expected the same lows. So I drew my daily zone at these lows. Then I went to the 4-hour. And what I saw on the 4-hour was we had here that bullish M. So we had our first leg, second leg, third leg, and the fourth leg coming back till this previous structure, higher low, and then we went to the daily minus 27. This is the trade I took with my demo. So yeah, we could take here some partials for around 2.3%, and then I went break even. So this was a trade on gold euro for me. So I hope you had a nice weekend, and yeah, see you next week. Bye, everybody.